How to retire in 10 years starting with $0. In 10 minutes, I'll tell you everything you need to know about achieving financial independence. The reason 99.99% of the population doesn't do it is because they don't know where to start and don't have the resources available to sustain it long enough for it to really work. 99% of the world's population retires between 60 and 70 years old. I'll tell you how I did it and how you could replicate a strategy. Number 1, give the video a like to help with the YouTube algorithm. It helps me a lot. Now, step number 1. When it comes to increasing your net worth and being able to retire, contrary to popular belief, how much money you earn doesn't matter. People don't know that when it comes to financial independence, what matters is how much of your income you manage to save at the end of the day. Many people spend almost all their income on rent. If you want to know the secret of how I was able to reach the point of being able to retire, it was because I lived with what I really needed: clothes, food, and a house that allowed me to be very comfortable but not luxurious as I still wanted. And I always spent the same amount of money. I made my budget in Excel and saw everything I really needed. You must pay close attention to your expenses and not so much to your income, and that's the first rule to be able to retire in 10 years, save. What most people don't know is that, based on your current income and expenses, you can calculate how long it will take you to retire based on your current savings rate in less than a minute. For example, if you spend 100% of your income, you will never be able to retire because you always have nothing left. But if you save 25% of your income, you can retire in 32 years and maintain your current standard of living. If you save 50% of your income, you can retire in 17 years. If you save 70% of your income, you can retire in 8.5 years. Do you understand the idea? The higher the percentage of income you save, the faster you can achieve financial independence and the faster you can do what you want. There is a saying that is quite basic and that I heard a long time ago, but it is so true: the rich remain rich by living as if they were poor, and the poor remain poor by living as if they were rich. What is super important and that I went through, is that at the beginning I didn't really save money, I invested it in mentors who had already achieved financial freedom, and little by little I copied their strategies. Other people save and save from their salary to maybe buy an apartment and rent it out. But investing in good mentors who teach you their strategies allows you to take big steps. Save yourself time. And that's what we want. To have more time to enjoy our lives when we are young. You must do everything possible to save more money and live below your means. Remember, for every 5% of extra income you save, you can retire several years earlier, so every little effort counts. There are many ways to cut expenses without staying at home and not going out. For example, the biggest expense we all have is housing, which can sometimes consume up to half of your income. However, there is a much better option that will allow you to reduce your expenses or even save on this completely, and that is what is known as house hacking. This is when you buy a multifamily property like a duplex, triplex, or fourplex and then move to one side to rent out the others. You can also buy a single-family home with a guest house or perhaps a basement that you can rent out to reduce your cost of living. Usually, when done correctly, the other units will cover all the costs of owning the building and suddenly you will have a free place to stay. Now, to do this, you must save a down payment of 10 to 20%, but you can use that payment to have practically a free home for the rest of your life. Even if you don't have the down payment right now, don't worry, you can also reduce your cost of living by hacking the rent, where you rent a house and then sublet the rooms to cover your cost. Although you won't own the place, you can still save the difference and apply that money towards some of the following steps I'm going to share with you now. Other ways to save money are quite straightforward. Instead of driving a new car, drive a reliable used car that won't lose much value. If you're interested in traveling, learn to take advantage of credit card sign-up bonuses as a way to cover your flight and hotel costs. Cook at home instead of eating out. If you want to go shopping, wait for the item you want to be on sale. And no one notices the difference between a $5 t-shirt and a $50 one. There's one more way you can save money: every time you see something you want to buy, just wait a week to buy it. If you want to retire in 10 years, you absolutely must stay away from high-interest debt. This is fatal for financial independence. High-interest debt like credit card debt, medical debt, and student loans, are the worst for financial independence. So, to be able to retire, high-interest debt like this cannot exist in your entire financial ecosystem. I'll tell you that with my credit cards, I make sure never to carry a credit card balance, I never finance anything I can't pay for, and I stay away from any debt that isn't a tax-deductible, low-interest, fixed-rate loan for a car or a mortgage that's below 4%. For me, the only acceptable debt is something that makes you more money by not paying it off, like having a mortgage at 3% on a rental property that gives you 9% or taking out a loan for a car at 2% when inflation is 7.5%. In those situations, taking on debt can accelerate your path to financial independence, but unless that debt is tied to an asset that makes you money, it's probably best to stay away. Another important point to achieve financial independence: if you want to retire in 10 years, you'll also have to invest. Invest consistently for the long term. Just take a fixed percentage of your salary and throw it into investments no matter what. Don't try to predict the market, regardless of the price at which it is trading, by investing in a low-cost or free index fund that covers the entire market. Vanguard, Schwab, and Fidelity offer really competitive rates, so take advantage of them. If you're starting with $0 and your goal is to retire in 10 years, then you're going to have to earn a lot of money or spend very little money. Choose one. For example, if you're earning $70,000 a year, theoretically you could retire in 10 years if you live on $21,000 a year and consistently invest the difference. That will allow you to live indefinitely with the same lifestyle after those 10 years, and of course, you can always get a second job to earn even more money, or you don't even have to stop working if you don't want to, but you will never be forced or need to work as long as you keep spending the same amount of money. As you can see, without earning more money, your ability to retire in 10 years depends entirely on your ability to save 65% of your income for an entire decade. But assuming you don't want to live with the bare minimum and want to live a middle-class lifestyle after 10 years, then the truth is that you probably won't get there working in a traditional job unless that job pays you a lot of money. Now, if you're earning a lot of money, saving 65% for 10 years and that's it. Although for everyone else who wants to have the chance to retire in 10 years and earn a lot of money, my advice is to work in a career that pays you based on results and not on your time. The biggest problem I see with being paid for your time is that there are only 24 hours in a day, so eventually you will reach a ceiling in terms of how many hours you can work and how much money you can earn. On the other hand, if you're paid for results and not for your time, then hypothetically you should be able to find ways to optimize that to earn more money without working harder. It is really essential to work in a career where you can leverage what you do to earn more money without having to spend more time. Another idea I got from the book, The Millionaire Fastlane, where there was a phrase, "Think like a creator, not like a consumer." Instead of watching videos on YouTube, make videos on YouTube. Instead of buying t-shirts online, sell t-shirts online. You need to start creating value and building something, not consuming it, except for this YouTube channel, that's the exception. Obviously. Don't forget to subscribe. Remember, some investments can help speed up all processes, especially by investing in mentors. Now if you're already saving as much as you can and you have no discretionary income left, then your only focus is that you must increase your income at least by learning a new skill, selling yourself in the job market, or taking a second job. At the end of the day, retiring in 10 years is about the numbers, and although your expenses tend to be the easiest to control to guide you in the right direction, your income is the speed at which you reach that goal. So by reducing your expenses and increasing your income, you can work backwards to a 10-year retirement target date without being more complicated than that. You must earn enough to be able to save 65 to 90% of your income for an entire decade, and at the core, that's how you're going to be able to retire in 10 years. If I could. You can too. To stop working out of necessity was my dream. Now I do it because I like it and want to contribute to the world. And we can all achieve it by working and doing projects in different areas. I hope this content has been very useful to you. Remember to give it a like if you learned something new, and if you haven't already, be sure to subscribe and click the bell so that YouTube notifies you every time I upload a video. Remember, if you have any questions, just write in the comments. I read and reply to you. Check out the other videos on my channel.